Hello, my name is Patricia Au. I'm a Senior Manager at the Australian Accounting Standards Board, the AASB. In this webcast, I will provide a high-level overview of the modifications to AASB 13 fair value measurements applicable to not-for-profit public sector entities. Please note, this webcast provides my personal views and does not represent the views of the AASB or other AASB staff. The contents of this webcast are for general information only and do not constitute advice. The AASB disclaims all liability for any loss or damages arising from reliance upon any information in these webcasts. This webcast is not to be reproduced, distributed, or referred to in a public document without prior approval of the AASB staff. In December 2022, the Board issued an amending standard to modify the AASB 13. That standard is the AASB 2022-10, Amendments to Australian Accounting Standards, Fair Value Measurements of Non-Financial Assets of Not-for-Profit Public Sector Entities. The AASB 13 modifications are applicable only to not-for-profit entities in the public sector. They are limited to fair value measurements of non-financial assets not held primarily for the ability to generate net cash inflows. That is, assets held primarily for their service potential. In this webcast, all references to an asset refer to this type of assets. The modifications are mainly regarding three aspects: how to identify the highest and best use of assets, which assumptions to use when the standard refers to market participant assumptions, and what factors to consider when estimating the cost of a reference asset when applying the cost approach. In respect of highest and best use, the standard states that an entity's current use of a non-financial asset is presumed to be its highest and best use, unless market or other factors suggest that a different use by market participants would maximize the value of the assets. However, some stakeholders argued that in some cases, they would incur disproportionate cost and effort in considering whether market or other factors suggest that a higher and better use than the asset's current use exists. The Board considered stakeholders' comments and added paragraphs AUS 29.1 and AUS 29.2 to the standard so that not-for-profit public sector entities are required to consider whether an asset's highest and best use differs from its current use only when at the measurement date either the conditions in the AASB 5 are met for classifying the asset as held for sale or distribution to owners, or when it is highly probable that the asset will be used for an alternative purpose to its current use. All the conditions set out in paragraph AUS 29.2 would need to be met for it to be considered highly probable that the asset will be used for an alternative purpose to its current use. One of those conditions is that based on reasonably available information, it is highly probable that the asset's current use will cease within 1 year of the measurement date. In respect of the market participant assumption concept in fair value measurement, some stakeholders commented that many assets provide services that are unique to the public sector holder of the assets, and therefore it is unlikely to have an identifiable market participant other than the holder of the assets, and for the market selling price of these assets to be directly observable because they are rarely sold. The Board considered stakeholders' comments and added implementation guidance in the AASB 13 to assist not-for-profit public sector entities apply the concept of market participant assumptions in measuring the fair value of assets not held primarily for the ability to generate net cash inflows. The Board added paragraphs F4 to F7 to the standard to state that if both the market selling price of a comparable asset and some market participant data required to measure the fair value of the assets are not observable, the asset's fair value would require development of at least some unobservable inputs. And to do so, the entity uses its own assumptions as a starting point and adjusts those assumptions to the extent that reasonably available information indicates other market participants would use different data. To the extent that relevant information about other market participant assumptions is not reasonably available, the entity shall use its own assumptions in developing unobservable inputs. I will now provide an overview of the guidance added to the standard regarding the application of the cost approach. The BASB 13 paragraphs B8 and B9 state that the cost approach reflects the amounts that would be required currently to replace the service capacity of an asset, based on the costs to a market participant buyer to acquire or construct a substitute asset of comparable utility adjusted for obsolescence. The board added paragraph F9 to clarify that to estimate the costs of a substitute asset of comparable utility, an entity would start by estimating the cost of a reference asset, and then adjusting the differences in the current service capacity of the reference asset and the subject assets. A reference asset could be a modern equivalent asset or a replica of the subject asset. Subject assets is the asset subject to measurement. Because the BASB did not explain how to estimate the cost of a reference asset, the board added guidance to provide a list of factors to consider when estimating the cost of a reference asset. I will now provide a quick overview of that guidance. Because the location of an asset may potentially affect how its fair value is estimated, paragraph F11A is added to the standard, which states that when applying the cost approach to measure the fair value of an asset, such as real property, the entity is required to assume that the reference asset will be acquired or constructed in the subject asset's existing location, even if it would be feasible to replace the property in a cheaper location. In respect of the types of costs to include in estimating the cost of a reference asset, the general principle underpinning the guidance is that the costs to include are those that are necessarily incurred in the hypothetical acquisition or construction of the reference asset at the measurement date. Consistent with the guidance on market participant assumptions, if both the market selling price of a comparable asset and some market participant data required to measure the fair value of the asset are not observable, the entity shall use its own assumptions as a starting point in developing unobservable inputs to estimate the costs of the reference assets, and then adjust those assumptions to the extent that reasonably available information indicates that other market participants would use different data. Paragraphs F12 and F13 have been added to the standard to outline specific types of costs that would be included in estimating the cost of a reference asset. Those costs are included if an entity, based on its judgment, determines that those costs would necessarily be incurred to hypothetically construct the reference asset at the subject asset's existing location. The list includes costs that relate to parts of an asset that are not expected to actually be replaced in the future. For example, road formation costs. Costs required to restore an other entity's asset that would be disturbed when hypothetically constructing the reference asset, unless those costs relate to restoration of an asset included in the consolidated group to which the entity belongs. Other disruption costs, such as costs of redirecting traffic. Costs required to prepare the reference parcel of land on which the reference asset would hypothetically be constructed would also need to be considered. To avoid requiring excessively costly and time-consuming estimates of these specifically identified costs, the board specified in paragraph F14 of the standard that an entity need not undertake exhaustive effort to obtain information about those costs. However, an entity must include all such costs for which data are reasonably available. This is the end of the overview of the BASB 13 modifications. This slide outlines some of the other matters requested by stakeholders for which modifications to accounting standards were not made. The board considered the matters which are discussed in the basis for conclusions for the BASB 2022-10. The board concluded that additional guidance in the AASB 13 was not warranted. This was because the board did not identify a gap in existing accounting standards, or that the matters related to detailed valuation assessments, or that they're not specific to the not-for-profit public sector. In respect of fair value measurements of land subject to public sector specific restrictions, the board was informed by stakeholders that a largely consistent measurement approach is being applied, whereby the majority of such land is being measured using the market approach. The board noted that every parcel of land is different, and judgment needs to be applied based on the circumstance of each parcel of land in determining whether restriction imposed on land would transfer to market participants and the likelihood of the restrictions being lifted. Therefore, the board did not mandate a measurement approach to apply in measuring restricted land. Please also note that, as mentioned earlier, a not-for-profit public sector entity is required to consider whether the highest and best use of a parcel of land differs from its current use only when at the measurement date either the AASB 5 conditions are met for classifying the land as held for sale or distribution to owners, or when it is highly probable that the land will be used for an alternative purpose to its current use in accordance with paragraph AUS 29.2. The AASB 13 modifications shall be applied prospectively. That is, there is no restatement of comparative information. The modifications shall be applied for annual periods beginning on or after 1st January 2024, with early application permitted. Please note, as discussed in paragraph BC 42 of AASB 2022-10, the AASB 13 modifications would not necessarily change practice for some not-for-profit public sector entities, and do not indicate that entities changing practice in how they measure relevant assets made an error in applying the existing requirements of the standard. This is the end of the webcast. Thank you for watching.